Good evening, traders. Today's Friday, February 17th. Markets have been closed. We had one hell of a week. Crazy, crazy volatility. Op X, third Friday of the week. But Friday today was relatively calm, relatively speaking. And unfortunately for the bears, you were trapped again. And I got some bad news for you, because I'm going to show you conclusive evidence, facts that you cannot refute because the facts are undisputed, that the uptrend is continuing. You were baited. You were duped. Okay? So, we're going to get into that. We're going to get into the higher lows review that has occurred. We basically double bottomed. And that the trend started this afternoon. As you saw, it went up and it stayed up. It didn't do a pump dump like it was doing for the rest of the week. Okay, we're going to do a weekly chart review where I'm going to show you conclusively that you cannot argue against that we are not making the next leg lower. Okay, I'm going to show you the 1 hour futures MACD yet again. Also, irrefutable evidence. Then we'll get into the intraday tweets on what happened today. And then I'm going to actually give you guys some swing trade ideas on a couple different things. Okay? But first, I want to dispel some misconception that is amongst, I would just say 1% of you. 99% of you guys, the subscriber viewers, you're good. No problems, no issues. There's about a 1% of you out there, mainly the newer subscribers, or who I will call the bitter bears, who think I am a perma bull, when that could not be further from the truth. Let me show you what I'm talking about right there on this screen. I was asked by one of the subscribers, hey, what are your thoughts on Dollar General, DG stock? Okay, I said, DG stock weekly MACD is just as bad as Devon Energy, DVN. Okay, they are both in horrific shape. Okay, I said, for both stocks, I see multi-week declines. So there's no point to dollar cost average down. Okay? That doesn't sound like I'm a perma bull, does it? Okay? That's just one example. Let's move on, shall we? Over a month ago, somebody asked me about BOIL. Okay? You could barely hear. Why don't I zoom in? You don't have to take my word for it. At the time, BOIL's price was $11.11. Okay? Zoom out. Somebody asked me to take a look at it. And what was my response? Ooh, BOIL's monthly and weekly are in absolutely horrific and are in free fall. Okay? I won't get into all the reasons, but I just said it is horrific and in free fall. At the time, BOIL's price was $11.11. And the response was, oh, that's kind of weird because Gareth Soloway, you guys know Mr. Gareth Soloway, right? He's cool. I like him. He bought it at $11.45. And by the time I looked at it, it was $11.11. Okay? I said, well, I disagree with him because it is not even trying to touch the daily SMA, etc., etc. I just said it is, there's my words, weak, weak, weak. Okay? And somebody else a little bit later, on February 1st, okay, this was in January initially, but now it's February 1st, somebody actually asked me again. I said, actually, BOIL is in horrific shape. So I have the same answer. I did an episode on that where Gareth Soloway bought it around 1046. And I said it's nowhere near the bottom. And now on February 1st, BOIL is down to 646 now. Down from 1111, down from 1046 when Gareth Soloway bought it. It is now at 646. UNG is also in terrible shape. Does that sound like a permabull talking there? For BOIL, for UNG, for DG, for DVN? That sounds like, oh man, these guys he's just always bullish. What's the deal here? Come on, man. Check your guys' ego at the door, you bitter bears. You almost make me want to chuckle. Okay. Another gentleman on Twitter finally asked me to look into Boyle. And this is what I sent him. After I reviewed it for him, I told him the same thing. I said, Boyle is in for a multi-week decline. So this is the tweet you're looking at tonight. What is Boyle's price tonight at close? $5.15. Okay? These are the facts. So you want to call me a perma bull? Maybe you need to look at yourself in the mirror, because I don't know who's delusional here, me or you. Okay? At the time, it was $11.11. It's now down to $5.15. So I'm not a perma bull. Okay? So just get that out of your heads. You must have been hanging around Juan Walker too much or something. I don't know what your deal is. Okay? All right. Higher lows. Up we go. Okay? But before I get into that, look, for you guys who follow me on Twitter, I just call a spade a spade. If it looks bullish, I'm going to call it bullish. If it starts to look bearish, when there's bearish divergence, I'm going to call it bearish. I'm going to say get out of your puts or get out of your calls. Maybe if you want to get puts or whatever. Okay? I'm just going to call it the way I see it. Just like I called Boyle, just like I called Dollar General, Devon Energy, and then actually there was a follow-up question that I didn't show. Is about Microsoft. I said, yeah, actually Microsoft is actually pretty close to a breakout. Close. They're getting close. Okay? Get close. I think they're just a little bit off, but they're going to get there. All right? So, higher lows, up we go, guys. Unfortunately for you bears, you were duped. This was just a standard retracement back down from February 10th. Higher low made today. Wick up, wick up, wick up, wick up. Close at session highs. That doesn't look like something that's going to crash. Now does it? Okay, you guys, you bears, you just need to just start asking yourself hard questions. Why do you have a downward bias? Why do you have a downward directional bias when the data doesn't support that position? I'm showing you data. I'm not just showing you things like Ron Walker does, right? Oh, well, see, this, I got the crash signals right here. I'm actually showing you data. So why do you need to ask yourself this question? Don't ask me. You don't need to talk to me. Because every time you want to argue with me in the comment section, you're actually not arguing with me. You're arguing with the market maker who keeps bear trapping you. So quit arguing with me, okay? Just get that out of your head right now. It's almost comical, some of the comments that I get. Which, by the way, if you get a little bit too hecklish, you know, like a beggar solicitor coming up in my door, I just hide you from the channel. So don't bother like leaving comments like that. Okay? So, anywho, so here we go, right there. Okay? Look at all this wick. I mean, that's just all there is to say about that. Okay? MACD's making higher lows right here. Compared to right there. It's kind of hard to see, but it is higher. You're going to see it on the SPY futures. It's going to be loud and clear. Okay? On the hourly, higher lows. Up we go. 69 RSI. 69.86 towards close. Now, you guys need to ask yourself something. Despite, I mean, look at this. This happened on, remember this? The 2.9 decline? Oh, that rhymes. The 2.9 decline. Remember this? This big one, what I call their bluff? How is it if the market makers really were going to take this lower, how in the world the following day it just rips up, and for the next 1, 2, let's just include overnight and pre-markets too. Just 1, 2, 3, 4 sessions. 4 consecutive sessions of RSI above 70. Despite a significant decline, what followed was 4 consecutive sessions of RSI above 70. Oh yeah, they're going lower, all right, huh? And then yesterday, when this thing went down, it kept going down in overnight in pre-markets. We ended up today at session highs. Oh, we're going lower. Okay, you bears need to just look at yourself in the mirror and start asking yourself the hard questions. Why do I continue to get trapped? That's the question you need to ask yourself, because you keep getting trapped. Okay? Now, this is what I tweeted about the same chart right here. This is the same chart you're looking at on the right-hand side here. For this to be true, this is a double bottom. The lowest candle on right here. I'm referring to this one. The lowest candle most close must 404.50 excluding is this candle right here. I'm talking about the candle body, 404.50. Okay? That's the hourly candle, 404.50. 404.50 is the pre-market 210 candle body close. I'm excluding the wick. I'm only talking about the body, okay? None of these, here's the pink line. Here's the 404.50 pink line. Today, none of them closed at 404.50. All of them wicked up, wick up, wick up. Okay? Somebody's buying this bad boy. You officially made a higher low than this. There is no factual justification that says, oh yeah, we're going lower. Nothing. There is no factual justification that says it's going lower. All right. Let's check this out. The weekly, SPY weekly. Let's check it out. Okay. Let me zoom into this first. You guys, look at this. This is... it even exceeded my expectations. Up, green, green, red, tall wick, wick up. Green, green, red, red, wick up, wick up. These are shallow pullbacks. Shallow, shallow pullbacks. That is not bearish. Okay? It is not bearish. Now, I think next week, we've already had 2 consecutive red weeks. 2 consecutive red, shallow, red, shallow. It's time for next week to go back green. You think you're going to have a third red one? Really? Pullback, pullback, shallow. Next one is up. That's just natural cycle, guys. You guys had your chance. The bears had their chance to sell off, sell off, sell off. And quite frankly, I thought it was going to be a retracement to this 401.40, 401.42, the red EMA 50 right here. I thought that was reasonable. You've had 2 weeks now to do it, and you can't. So what factual argument are you going to give me that says, oh yeah, you're going down, when the previous red candle before that, huge wick up. Consolidation under the EMA 50, the weekly EMA 50. This red wick, which according to Ron Walker is the bearish hangman, no, that is bullish. That is consolidation under the weekly EMA line. That is bullish, especially with a huge wick up. Look at the previous weeks. Up, 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 up. And now the last 2 weeks of retracements, theoretical retracements, up, up, up. Tell me, how is it going to go down? How? You can't tell me, can you? All you can do is sit there and say, well, you're just a perma bull. But I'm showing you facts right here. Now, you want more facts that you cannot dispute? Watch this. Okay, this is the weekly MACD. You see how it has crossed the zero line right there? At no time in 2022 did that happen. Look at that. That is why 2022 failed to hold the back test on the EMA 50 or the SMA 20 because you're too far below the zero line. That is why the August peak was simply a means to an end for the market maker. That's all it was. The August peak right here. Look how far below the zero line it was. It was never meant to take over the EMA 50. Period. Full stop. Full stop. The zero line is equivalent to the EMA 50 line. I have said that many, many moons ago on presentations. The zero line on the MACD is equivalent to reclaiming the EMA 50. That is why, look, in March, it came up past it, the EMA 50, but failed to back test it. Why? Because the weekly couldn't cross the zero line again. And that was March was the beginning of the crazy fall. March 2022 was the beginning. In all of 2022, the weekly EMA 50 could not cross the zero line until now, starting in January. Was it January? Yeah, something like that. Late January or so. Now, let's go back to history, the facts for you bears who still like to use emotion to make your trading decisions. When was the last time the weekly crossed over the zero line? Look what happened. Up we go, don't we? When was the last time before that it crossed the zero line? Look what happened. Up we go, don't we? Now what have you got to say? The facts do not support your directional bias that say we're taking the next leg lower. We now have 1, 2, 3 consecutive weeks of successful backtests on the weekly EMA 50. In all of 2022, I mean, March was your closest. August, no. Nope. December, nope. March was your closest, but unfortunately for March, you couldn't cross the zero line again. That's why you failed. Okay? I mean, these are the facts right here. This is not my opinion. This is not, I'm not quoting you some 9-9 crash signal like Ron Walker does. I'm showing you the facts that cannot be disputed. These are the facts. Okay? Now, despite this week that seems so horrible on the, oh, we're going to crash, RSI ended up at 62.54 right here. Look at that. Does that look like that's going to crash to you? When I think next week, it's going to be a green candle's turn. That RSI is going to turn back up. So I tweeted this out today. Do you see the weekly pattern? Now you have 2 consecutive backtest weeks. Shallow backtest wicks up. I'm talking about these 2 red candles right there. They don't even touch the EMA 50. That is bullish. And that is the same EMA 50 that has denied SPY in all of 2022. Let that sink in a moment. What I'm saying right here and what I'm showing you are facts. And like Kevin Bacon said in A Few Good Men, and the facts are undisputed. I tweeted this out on February 4th. I keep forgetting to show you guys this until now. Despite everything I've shown you already, there's still one more card in the 52 card deck I haven't shown you guys yet. And I tweeted this out back on February 4th, 2 weeks ago. I'm going to keep it vague. That if SPY holds 390 to 400, if it holds, that range holds for February and March, it will go down in history as the all-time greatest hidden bull market the market maker kept a secret. I will show you guys in April what that one card that I'm holding close to the vest is, because I see more patterns. But I will give you a hint. This same pattern all of you guys can find on your trading platforms. It is hiding in plain sight. Okay? It's so covert, it's overt. All right, that's all I'm going to say about that. That is all I'm going to say about that. SPY futures, let's get into it. This morning, on this morning's episode, I showed you guys in the entire month of January and February, SPY futures MACD 1 hour chart, the bear line is negative 20 right there. Only in middle-ish January, call it January 19th, it came down to the negative 20 bear line, created a higher low notch, and then rocketed back up. Since then, it has not touched the bear line. On February 10th, it came to negative 16, and guess what? Today, it came back to negative 16, and it went back up. So how can you make the argument we're going lower when the entire month and a half has not gone below the negative 20 bear line on the MACD? The facts do not support your opinion. I want to say that again. It is your opinion we are going lower, but the facts do not support that. This was today. This is how it ended up today. This was this morning. This was today at close. Are we going lower? I tweeted this out this morning when I finally realized, I see what you're doing. When it looked like during the morning session, you were kind of grinding lower, a little bit. You know, you were kind of testing those lows. You like triple bottom during the first half of the morning. But when I tweeted this out, I realized, I know what you're doing now, because I looked over futures while you were doing it. When at opening bell, okay, this was opening bell. It already made an up move here. The morning session was to flatten out a little bit here to create an equivalent higher low notch. So you bears, you thought, see, we're going lower. Actually, it was carving out the notch so that it can go higher. That's exactly what it did here, and that's exactly what it did today. Okay? Sorry, that's just the way it goes. Okay, yeah, I basically already talked about this. The negative 20, all of January and February low. See the negative 20 bear line, right? This is the same screenshot that you're looking at right here. Yep. It pivots at or above the negative 20 line. uptrend continues. Today's MACD pivoted at negative 16, right here. Not going lower, guys. It's like a mathematical fact. You're not going lower. Okay, so here's the intraday. We're going to get into intraday tweets. Some goodies. Good goodies. Okay, so, I mean, basically, guys, actually what you're looking at right now is my a typical screen that I look at on a daily basis. It's got like nothing on it, like but lines, right? Obviously, up here, you got the 2-hour EMA 50, SMA 20, the 4-hour EMA 50, the 30-minute EMA 50, whatever. Obviously, I have my channel lines, okay, but and I got the MACD and RSI, but in general, this is it. But this is what you're looking at. This is my trading screen every day. Obviously, I'll draw in. You guys will see me drawing. Oh, I'll draw in a pink line right here or something like that, like the downtrend line. But that's it. This is my trading screen. I don't draw too much stuff on there. I just want to see what the price is doing. Okay. So, one of you viewers last night were like, "Are you gonna go long? Are you gonna go long at 4:0 whatever in the morning?" Uh, the answer to your question is yeah. That sucker started going down. I said, I'm going long. You bet I am. Okay. This was the plan all along. Basically, I looked left and I saw 210 on February 10th, and then today, February 10th, the wick low was 404.15, and today was 404.18. Well, that 404.18 was at the time. It was right here, right there. So I'm just comparing. I'm like, are we making lower highs? I'm sorry, are we making lower lows or higher lows? That is ultimately what you've got to determine. So the key is to figure out high or low from what anchor date, right? In this case, it's February 10th. So new trend begins. Bearish trapped again. Okay, I was like, yeah, I'm already seeing it. So okay, so before I move on, here we go. Here, remember that higher low notch? This is when I started to figure, you're making the notch. Right here, I even talk about it. Higher low notch complete stops the fall. It stops that downtrend that happened last night. Higher low, doop, locks it in. It took all morning, literally. It went right up till like noon. Okay. This, I think I have that tweet. I'll show it to you when I get to it. Okay. So I was referring to this right here. Yes. This right here. I said, actually, this latest backtest technically fails. The candle body, the candle closed at 405.41. The EMA 50 line was 405.44. So it straddled the line right here. See, here's a screenshot at the time right there. I said, that's gonna fail. And what happened? Goodbye. It failed. Okay, that's why you gotta wait for the backtest. 99% of the time. There is a 1% of the time. I have taken exception to that, like this week. I said, oh, I don't care. This bad boy is going up. The 1% is if you are literally at a channel bottom like this, you are literally at the channel bottom. I almost blindly go long. That's what happened yesterday. Like, bear's gonna get trapped right here. Like, I won't. If this, let's just pretend the channel bottom was right here. I'm not gonna wait for a back test up and then like that. As soon as this actually starts going under the channel, I'm going long. Especially if you've been falling already for a good distance. Oh, absolutely, absolutely. Okay. So, okay. Oh, yeah, this is just comparing SPY MACD to SPY Futures MACD. Yes, SPY Futures is actually ahead of SPY when you look at the MACD. So, despite my futures being 10 minutes lag, it's still ahead of SPY. So, you might want to check that out next time because SPY Futures already had a positive cross before SPY started to even curl up on its MACD. Okay, see that? It's not even curled up yet. This one is not only curled up, but actually started to have a separation from the signal line. Okay, so okay, finally, right here. Yes, 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 yes. Right here. Finally, we get a successful backtest. Backtest candle close. 405.21, EMA 50, 405.20. Yes, 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 yes. When the EMA is taken back intraday, that is a trend change. And what happened after the EMA 50 was taken? Goodbye. And what happened before that when the EMA was not backtested? No, no, no. See? It boils down to these very little observations starting from the 5-minute chart that you're looking at right now. Very nuanced view. It's like, ooh, ooh. This one was the moment. See, I got the screenshot right there. I was like, yes. Yep. I was like, oh, you did it. You did it. Because I want to show you something else. January 4th, the first trading day coming back from the new year. Guys, we may have an official trend change since 1214 FOMC. The 5-minute MACD is above zero. So for back testing, okay, yeah, right here, right here. The same trend change that happened right here. Back tested. EMA 50 on the 5-minute chart. Confirmed successful back test of the EMA 50. This was on January 4th. How did that come to pass? You guys know the answer. What happened in January? We took off. That trend change happened as of January 4th at 10:01 a.m. to be specific. Yep. See? Here we are. February 17th. Okay? So, all right. Oh, this is just me describing at this point. Oh, it would have been up here, right here. Yeah, so here we go. Yep. No bearish divergence. 1 hour MACD positive cross. 1 hour RSI 79. And by the way, did I mention that I scaled into calls in the morning? Okay, this is key. Now, I tweeted this out. Every trading day has no relationship from the last. The previous times were dump, pump, dump, or pump, dump, pump. It does not mean the pattern will repeat today. And it didn't, did it? It happened yesterday. You saw that. You saw the collapse at the end of the day. This is the classic gambler's fallacy. You got, if you're flipping a coin, you got 5 heads in a row. Therefore, the 6th must be heads. When actually, statistically, it's no better odds. The 6th coin toss is no better odds than the the previous 5 that you're going to get heads. Okay? So, and this just me just saying, hey, if you believe the market maker will reverse direction this afternoon, then get puts. But if you believe they are starting a new uptrend, then don't get puts. Okay? So, okay, this is another important one. Here's where everyone and their brother thinks a dump is next because of what MM did this week. The dump will not come. Okay, what I'm talking about, right here, see that? Right there. That's equivalent to right here. This shaded area is the gap fill. That's the gap fill. Okay. Let's see if it's on the next slide. I think it is. Yes, gap fill. That gray band, but it didn't dump. The universal expectation is you dump after you fill the gap. You dump. You come up, fill the gap, and you dump. But might I also remind you that remember when we went to SPY 396, 398 to fill that gap, and we didn't dump there either? Okay? So, what I'm trying to say is don't let statistical definitions or even universally accepted expectations or schools of thought influence your decision making, because it is universally accepted that you get a dump after you fill the gap. But now you are introducing the word should in your trading decisions. It should dump, or it should dump in the afternoon because that's what the markers have done all week so far. It should. Now you're projecting forward. Try to replace the word should with does. It does do this when this happens. When you have a successful back test, it does mean a trend change. When you fail the back test, it does mean you will go lower. Not should. Okay, that is a very nuanced definition, but it makes all the difference in the world. All the difference in the world in your overall success trading. Okay? SMA 20 glide is hidden bullishness. What am I talking about? Right here. See how it's following the SMA 20 line? Doesn't even need to touch the EMA 50 line. That's hidden bullishness. It's hidden. The strength was always there. How could you have this kind of strength when you've been falling all night? You guys know what happened yesterday afternoon, all night. You went all the way down to 404. But yet in the same trading day, not only did you take back the EMA 50, which is also hidden bullishness, if you could take it back in the same day that you bottomed, that means the strength was always there. It's just whether you can figure out that it's actually the market maker is just manipulating. That's the key. Strength was always there after a big red day. Market maker hid the strength. Sorry, bears. Even somebody asked me, are you bearish now? At that time, it was right here. This question, right here. Are you bearish now? See? Because it looks like we're making lower lows. Lower lows. So you bearish now? I said, nope, not yet. The MACD made a higher. I should have been higher low. Signals the bottom, right here. Higher low. Lower low on price. Higher low on MACD. Signals the bottom. How did that turn out? Up we go. See? These are facts, not opinions. Okay? I thought this was a good one to share. This will be the last tweet for the intraday session. I literally view trading against the market maker as a multi-dimensional chessboard. This picture is also in my introduction. It is literally like chess pieces for a same game, but it's spread across multiple levels. The queen could be on the third level, the rook could be on the first level. Okay? So you have to conceptually play against the market maker like that, not just against on one board, but 3 boards where the pieces are all not on the same board. That's equivalent to me plotting out all of those EMA, SMA lines from the 1 hour, the 2 hour, the 4 hour, the 1 day, the weekly, the 30-minute, all those different time dimensions. Because the market maker are playing by the same rules. They are respecting all those lines and all these channel lines right here, all these channel lines. Look at that. All day was against this blue line. All day. And then at the end of the day came up and started following this black line. Hello. And then, oh, look at that. Gave you a little wink, wink, nod, nod right here. Look at this wick. Touch that blue line. Boop. Okay? They're playing multi-dimensional chess with lines that if you don't plot them, you don't know that they are there. Okay? So you got to play by the same rules the market maker is, not by your rules. Okay? So, I mean, this is literally like when you're playing multi-dimensional chess. I mean, this is like queen to bishop 2 on chessboard 3 up above. Rook to king's rook 3 on chessboard 1 down below. But you're all playing the same game. It's not, you don't have the rook triplicated across 3 different boards. There's just one rook. See what I mean? So you got to play by the same rules the market maker is. Okay, I wanted to show you guys this. Actually, today I contacted my I'm getting to some swing trade ideas. I contacted my broker, Fidelity, because I'm rolling back over to them my 401k accounts from another company, because Fidelity, as you guys know, well, in a lot of other places, allows me to trade options against my 401k. My current 401k provider rollover doesn't do it, so I'm like, well, I guess I'm going to go back to Fidelity. And I use Fidelity Active Trader Pro as my trading platform anyways. But anyways, so because I think it's now time to start to swing trade a couple different things. Uranium and gold. I actually, what you're looking at right there, I did episodes on that back in end of between Christmas and New Year. I want to check that out if you're interested. Okay, I'm going to swing trade my 401ks against uranium and gold. URA and GLD. Let's look at the first one. This is gold that I did back on December 25th. Oh, Christmas. December 25th. I said, go back and look at that, listen to that video. I said, gold is on the verge of a breakout. They're almost there. They're almost there, but they're waiting for something. I said that in that video. This blue arrow was when I did that video. How'd gold do then? Not too bad, right? They're just now back testing, but they're going to make a higher low, and then they're going to resume the uptrend. Notice this gap down? Oh, you're going to feel that gap. They're consolidating under the EMA. This is the week. Oh, this is the daily. They're consolidating under the daily EMA 50 right now. I bet they're going to do this, and then boom. You guys who follow me on Twitter, you guys know I talk about consolidation under a major line. That's exactly what gold's doing right now. So they did a major push, coming down, consolidate, and then they're going to pop it. And I'm going to get my 401k swing trade that bad boy. With options. You betcha. How about uranium? I did that on the 29th, 4 days after the gold one. And in that video, I already said, uranium's already ready to rock. They're ready to rock and roll. And here's the 29th. When I did that video, when I said it, they're ready. They've already started, actually. They're not waiting on anything like gold is. Uranium's already started. And look what happened on that one. Big old rocket ride, didn't it? I wish I would have got in on options at that time. Kind of regret it. But it's not too late because uranium is already starting its super cycle. It's got a lot more upside to go. A lot. So, I'll use Ron Walker's words this time, not to mock him, but just to repeat what he says. This is not a recommendation to buy or sell any stock or ETF. I'm just telling you what I'm buying. I'm not suggesting that you buy it. Okay? Please feel free to follow me on Twitter, where I give real-time tweets intraday. Don't forget to listen to your favorite music as you are trading. It helps you get into the right state of mind, helps you get into the right flow state, and achieve your Zen. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000, signing off.